Hello everyone, and welcome to today's webinar, Cracking the Ice, How to Submit a Compliant Incurred Cost Submission. My name is Mark Steiler, Senior Marketing Analyst at NeoSystems, and I'll be your host for today. But before we jump into today's webinar, I want to take you through a brief review of our agenda. In taking a look at today's registration list, we notice there are quite a few people that have never attended one of our webinars. So I want to spend a few moments talking about who NeoSystems is, our experience with incurred cost submissions, and how we help government contractors get compliant. After that, I'm going to turn things over to today's presenter, Carlos Alvarado, who is NeoSystems Vice President of Financial Planning and Analysis. He'll do a dive into many of the schedules that typically trip up contractors when they're getting ready to do their incurred cost submission. He'll also cover some of the validation techniques that will be helpful in making sure that all of your numbers tie out and that what you're submitting to the government is a true representation of what you did in the past year. We'll also take a look at what tools are out there to ease the incurred cost submission process. If you talk to any government contractor that has to do an incurred cost submission, they'll tell you that DCA's ICE model that's out there on the web, on DCA's website, is a pretty messy file, and there's a lot of macro issues on there, and it's just generally kind of confusing. So a lot of contractors are using third-party solutions like Impromptu and Cognos 8, Cognos 10 that are part of the IBM suite to really help out this process and make it a little bit more streamlined and automated. Next, we'll talk about the common reasons why contractors receive inadequacy letters. There are several areas in each schedule that auditors pay keen attention to. So you'll want to make sure that you account for these areas that Carlos discusses as they're considered priorities by DCAA. And as always, if you have any questions throughout the presentation, feel free to submit them in as we go along. We kind of deal with questions on a first-come, first-served basis, so make sure you get them in early, and we'll address them at the end. But first, we want to take a look at who is NeoSystems. NeoSystems was founded in 2000 primarily as a firm that did accounting and financial management services for government contractors. But we've grown quite a bit since then. In 2003, we became a Deltax partner, and even recently advanced to the premier partner level of Deltax. So we work pretty closely with them. We also became an IBM business partner in 2010 and have grown to be an IBM advanced business partner, which is a tier above. So since 2000, we've added 120 employees to our company, and now we represent over 400 clients that have an employee base of 23,000. So it's really quite a large base of government contractors that rely on us for their accounting and financial management and compliance. And now we do much more than just accounting and financial management. We really talk about our whole breadth of services as strategic back office services. So that not only encompasses accounting and finance, but also human capital management as well as IT. So what are some of those strategic back office services? Well, our flagship service is what we call a managed accounting service. And we do this service for over 100 government contractors right now. And what that is our government contractor clients entrust us with handling all of their day-to-day accounting and financial management responsibilities. So they're outsourcing it to us. And we get them compliant with the cost accounting standards as well as the federal acquisition regulations to make sure they're 100% on board with all of those policies and that they'll never face an audit where they'll fail. We also utilize our own Deltax licenses in that model. So our clients don't have to go out there and add a 50 series of time and expense whenever they go above a certain employee threshold. We do that all for them, and they don't have to pay for the licenses. We also host their accounting databases within our secure private cloud. So our hosting center carries many of the security accreditations that government contractors really rely on when they're picking a partner to host all of their accounting data. So that hosting center is SSAE 16, SOC 1 and SOC 2, PCI DSS, MA 201, and ITAR and compliant. There's a security accreditation out there. We probably have it. I mentioned earlier that we're both a Deltax and IBM Cognos partner. So we really concentrate on a lot of consulting services around those two product suites when it comes to government contractors. So on the Deltax side, we've got a team that focuses on Deltax First, which used to be known as GCS Premier, Deltax Cost Point, Time and Expense, COBRA, and really anything that falls under those umbrellas. And then on the IBM Cognos side, we work with Cognos 8, Cognos 10, Cognos TM1, as well as a few other packages. So we can help out companies in a number of ways. One way we help them out is by doing implementations of those systems. So if you're not using one of those and you'd like to, we're a good partner to work with. As well as we do some re-engineering. So if you've been using those software systems for quite some time, chances are that they don't quite meet what your business needs are today. So we'll take a look at how it was initially set up, where you are today and where you plan to be in the future and accommodate for that growth. We also do staff augmentation around those software packages as well. So if you have a team that's working on those, that is maybe experiencing a high workload for some period of time, we can come in and help them out with a variety of processes that need to get done. And finally, we have a financial planning analysis group as well, which our featured speaker today, Carlos Alvarado, is the head of. So that group really does a wide variety of things. From the ground level, they can help you out with your forward pricing proposals and your indirect costs, because that is really essential to your pricing strategy, to your proposal development, and ultimately will help you win new business. So we want to make sure that you get the full value of all your allowable costs that are wrapped up into your rates so you can be more profitable. We also have a focus on earned value management. So Deltax Cobra, I mentioned earlier, is another piece of software that sits under the Deltax family of GovCon products. And we help clients implement those solutions as well as fine-tune their earned value management strategies to make sure that they're compliant with those regulations that are out there. And finally, we also do incurred cost submissions for government contractors. That's why everyone's on the call today, is to find out more about what that process is like. So we can help companies out when it comes to doing everything for them, or rather we can just help out on some certain schedules that are a little bit tricky and that people tend to get stuck on. And when DCA does come knocking at your door, we can help with the audit process and act as a liaison between your company and the auditors. We've sat through many DCA audits, and right now is the time of year when we try to be best friends with them. So we certainly know the type of things that they're looking for and their process, and can make things a lot more smooth for you. But now I want to take a look at our first poll of the day. I want to see exactly how you're currently submitting your incurred cost submissions. As Carlos will get into in a moment here, there was a new version of the ICE model that's on DCA's website that came out in June of last year. So you might be using a model that's prior to that if you downloaded that in a previous year. Or are you using that model? Like I said, Carlos will get into some of the added nuances that came into that version. And so you want to make sure that you're read up on exactly how those will affect your business and how they'll affect your incurred cost submission for 2013. Some people are using a homegrown or third-party solution. I mentioned the IBM Cognos tools earlier, and some people do take advantage of those to help out that process. Or have you not submitted an incurred cost submission before? We know that some people out there, this might be the first time that they've had the requirement to do so. They're a growing government contractor, and they're just looking for some help and get pointed in the right direction. So the numbers are coming in, and let's go ahead and take a look at those. So actually a pretty interesting split. So our most popular choice was using the latest ICE model, and that's good. That came out last year. It's good that you're aware of that. We had 32% of people that said that. The 25% of people are still using the pre-June 2012 model. So you want to make sure that you take a look at the ICE model that's out there on DCA's website this year, and really review that and make sure that that you're using that in your operations before your incurred cost submissions are most likely due on June 30th if you're on a calendar fiscal year. 26% of people are using a homegrown or a third-party solution. If you want to go ahead and type in the chat window the types of solutions that you're using to do your incurred cost submission, just for our own benefit, that'd be great. And 18% of you haven't submitted an incurred cost submission before. Okay, great. So definitely make sure that you listen to today's presentation and make sure that you incorporate some of the knowledge that Carlos is about to give into your operations. So with that, I'd like to introduce Carlos Alvarado. Carlos is our Vice President of Financial Planning and Analysis. He's got over 15 years of experience in the government contracting industry, 9 of which have been here at NeoSystems. Around this time each year, his team helps many companies with their incurred cost submission process, but he also provides strategic financial and managerial accounting expertise to get companies thinking about their costs from a long-term perspective. Prior to joining NeoSystems, he spent 6 years as a government contractor, where he handled both accounting and financial management duties. So we've seen incurred cost submissions from 2 sides, both as a consultant and as a contractor. So with that, Carlos, take it away.
Thank you, Mark, and also thank you for the folks joining today. I know it's the critical time to get this done, and I appreciate your time, making the time for this webinar for you guys. So I wanted to get started with the DCA ICE model. Mark touched on that a little bit, but I wanted to at least get a sense of some background, some of the requirements related to the ICE model. First thing is just consider that it is a template, and it is for guidance only. You have to make sure that you're following the expectations and following the instructions, and not just from that ICE template, but more importantly from the requirements perspective, in compliance perspective. The ICE model itself has got quite a bit of macros. It's been built with some complexity around that. So ensure that you understand those macros and what they do, and as you're setting it up for the first time, or even making changes to the setup worksheet within the ICE model, ensure that you're running the macros accordingly, or certainly the right way. So keep that in mind as you're working with the ICE model. Something else, though, is that you can consider doing your own model, whether it's taking it from the prior year and really just enhancing the model that you're using, the Excel model that you're using, or maybe you're using a combination of the Excel model with some reports from a reporting system. Bottom line is just consider that, but keep up with the changes. Make sure that you're keeping in contact or checking DCA's requirements, because they tend to just publish something without a lot of heads up on that. So ensure that you're keeping up with those changes. And certainly one of the things that we recommend, and we also do for our customers, is to have an internal version of whether it's the ICE model or whether it's your own model. We actually use our own models as it's easier for us. We know what they are, and we do quite a bit of this every year. So we have an internal version of that and an external version of that. So the way we do that and why we do that is the fact that for the internal version, we have a lot of the validation, a lot of the checks and balances built into that version in the Excel model. So that way we can always go back to that. Clients can always reference that back, especially if you're going through some inquiries, some perhaps inadequacy letters, or even just an audit for that matter. So again, you use that internal version, really get into a mode where you can actually have an internal and also the external version, which that external version would eventually go out to DCAA as a final submittal. Okay. Moving into, still talking about DCAA and the ICE model. This is the changes that we talked about. Mark touched on that a little bit through the initial slides, and this is one that, there was one, the most recent release was back in June 2012. So there's been some changes to that, and some of those changes include, for example, the Schedule Q, which is comparative analysis. They've been now renamed to Supplemental A's, 1 through 4. So make sure you have the right names. Make sure that you're keeping up with this. Make sure you're keeping, you note on that. Schedule S, pertaining to contract briefs, and then now Supplemental O. And of course, the most famous Schedule T, or T-1, for executive compensation, now it's actually called Supplemental B. Some requirement changes that are actually very good news, especially for P. P hasn't really been used a lot over the years, given the fact that it's pertaining to contracts, very old contracts, if they're applicable. So for the IR&D and B&P, the Schedule P has been removed, so no longer you don't even have to submit it along, even if it's blank or even if it says not applicable. Take it out of your overall submission. Schedule R, this is one that I'm sure a lot of people will be excited about if you haven't heard this. This is pertaining to the claimed reconciliation of claim costs against your corporate tax returns. So again, no longer required. You can forget about it, take it out of the worksheet, and don't have to think about it again. So again, these are the type of requirement changes that has happened, especially recently with the changes that DCAA published out. Some modifications to keep in mind, it's been Schedule J. This is a subcontractor schedule. The need now to report it by contract type, so group that by contract type. So kind of have the different sections on that. Also include the delivery order, don't forget about that. And most importantly, period of performance, POP. Make sure that you have that in that schedule. This is something that wasn't required before, but now it is. So ensure that you have that requirement, you know what you need to do on that. You may actually have to go back and kind of do some digging, especially if you're not keeping up or you don't have it populated. You may have to actually go back to the contracts that you have with your subcontractors to get that information. So something to keep in mind, something that you need to do. And lastly, Schedule K. This is for the T&M type of build-up schedule. One of the requirements now is to compute the material overhead if applicable, if required. So something that you want to make sure that you're you're doing and you're showing and you're doing that calculation in the model. And the ICE model actually has that. So if you want to reference something, certainly, especially if you have your own model, certainly reference that back to the ICE model requirements. Okay, so I'm going to get started on the schedules. This is Schedule A. This is obviously probably the easiest one because there's no real input into the schedule. This is coming from various schedules. But one thing to keep in mind in this schedule is to show all of your claimed pools, basis, rates. That's not just your final pools. That's also intermediate service centers or even cost of money. Make sure that you have those shown into the schedule. If there are not, and you only have final pools shown in there, it will be picked up. It may be picked up by the auditors. It may be deemed inadequate just for that reason. So please make sure that you show all of those pools and bases. One recommendation on this is, as I share with you, have an internal in the internal version that I suggested and recommend, have the statement of indirect expenses as a column right into Schedule A, and have that as a validation, as a reference. Compare that as you're building up your model. You always can tie it back to what your actual GL information is and your SIE, statement of indirect expenses. So, and not just percentages. Certainly have the pools and the basis amounts. So that way you can trace that not just by percentages, but make sure that the dollars are tied out as well. Moving on to Schedule B, G&A expenses. This schedule, one of the things that we recommend to our customers is to report the expenses based on your organizational structure, whether it's divisions, lines of businesses, departments, things of that nature. Make sure that you're doing that across all schedules, all of the pool schedules. One thing to also consider is the fact that for any service centers allocations, the formulas that come from the other schedules, don't hard code it into the schedule. Ensure that those are the formulas coming from the other schedules, especially for those intermediate pools or service centers. Being hard-coded is going to raise questions. DCA will inquire about those things, so you just do as much as you can to avoid any increase, and this is one that I would suggest that you do, and ensure that you do it this way. One recommendation is, just like we recommended on Schedule A, is to have a total G&A expenses control amount. Put it into a cell to the right of in a column, but just have the total G&A expenses. And make sure that you also verifying that and have it, comparing it against your schedule. Quick and easy thing to do into the internal version that I spoke about. Easy to do, and it will come a long way to ensure that you have everything tied out. Moving into Schedule C, final overhead pools. Again, reported based on your organizational structure, so make sure of that. One other point on this is to ensure that if you have multiple overhead pools, that you have it broken down into different schedules, different tabs. Don't try to cramp it all up into one sheet or one worksheet or one tab. Ensure that you spread in that and have it in the different schedules as it needs to be. For example, having a client-side overhead versus a home-side overhead, or many others if you do have those. And again, having a total overhead expense control amount to make sure that you're taking time that against your accounting system, against your source of records. For intermediate pools, same thought. Reported based on how you're set up. Certainly have the different intermediate pools. If you have an IT service center, or if you have an HR service center, or any other service centers that you may have, definitely have it in its own schedules. And of course, ensure that any unallocated service centers expenses, if they're somehow sitting still in those service centers that haven't been allocated out, ask the question why. Why they're sitting there? Should they be there? More than likely they shouldn't be there. So ensure that you are doing the due diligence and going back and it may be perhaps related. We find this a lot in customers where that as you're closing the year, the allocation process is run maybe right before, and there's other changes right after that. So don't forget to run it again to ensure that everything has been allocated out. And again, I'm having a total service expense control amount as a way to tie that out, especially the allocation basis as well. Fringe pool, first bullet, same thing. Have it based on your organizational structure. If you have different pools, fringe pools, have it into your own schedule. One thing that is commonly now picked up by DCAA is to have the actual allocation of the fringe to final pools, meaning have the percentages, meaning have the amounts in right below the GL amounts, and have this allocation shown into the schedule. This is something that we've been seeing in terms of inadequacy letters, so ensure that you're doing that. One of the recommendations, of course, is the same, which is have that control amount, have that, put it into a cell and compare it against what you have into the schedule. Okay. Unallowable worksheet. This is not required. It's nowhere in the ICE model. It's nowhere in the requirements, but they want to see it. They usually ask for this. So include a worksheet. Include a worksheet that looks similar to a schedule, but it's not a schedule. But for unallowables, and break it down. And the breakdown really is between G&A unallowables and non-G&A unallowables. And what we mean by that is for G&A unallowables, take a look at those type of expenses such as interest, lobbying, dividend incomes, holiday parties, of course, that's the big one, right? But compare those and really take a look at those. Don't just throw it all in. They may have the same account sequence based on your accounting system. But take a look at that and really compare them against the non-G&A, excuse me, unallowable fringe or overhead or even direct costs for that matter. And make sure, please, make sure that those non-G&A unallowables always go into the G&A base as you're actually doing your incurred cost submission. Schedule E. This is what all comes together, the pools and bases. One thing to point out on this is the fact that description, the base descriptions. This sounds simple, but this is an area with auditors really take a look at that, and it doesn't make sense. It really they compare that against what is actually included in your base. So have the right description for that, especially when you're looking at G&A base. Is it a total cost input or is it a value-added cost input? Ensure that you have the right description there. I talked about it in the previous slide about including non-G&A unallowables in the G&A base. Make sure you're doing that. Don't miss the beat on that because they will pick that up, and ensure that you excluding G&A unallowables from that. In a final tile, this is something that we do for customers. This is something that we recommend all the time, which is having a final tile between Schedule E, as you can see in the screenshot right below. Take a look at all of your Schedule E, including non-burn ODCs, to really take a look at all of the total costs and compare that against Schedule H. Compare that against total cost in Schedule H after the burdens, after all of the calculations, and look for the variances if you have any, and of course take into account the unallowables there. Moving into Schedule H, this is probably one of the big ones here, right? I mean, you have a lot of information listed here, especially if we have hundreds, if not thousands, of contracts. One of the things that is actually pretty interesting, it's not even listed on the ICE model, but this is required. This is what they're actually asking for that, which is a customer agency, classified or unclassified contracts. Have them listed. Add those two columns, especially if you're using your own model, Excel model for incurred cost submissions. Ensure that you have those two. If they're not listed, if you don't even have the columns added to that, let alone not even listed, I mean, those are the things that will get you that letter that we certainly want to avoid. Commonly overlooked, subcontracts, IDs. This is one that we find in customers where they may have been populated into the accounting system in reference as a subcontractor, or as a subcontract in the ID that follows that. So ensure that if they are a subcontract, that the ID is actually included. So you may have to go back to the accounting system in a project setup and actually populate that field. Still in the Schedule H, this is another big debate as we find with customers. Level of reporting. How do you report this? And this is not just isolated to Schedule H. This is also related to in connection to some of the other schedules, especially Schedule I, as you're reporting the billings there. One of the things that we recommend typically is do it at the billing level. That is going to match up, right, between Schedule H and Schedule I, as I will get to that in the next slide, I believe. consider that. So that's something that you have to, especially be consistent how you've done it in the past as well. Contract review, make sure, please, that you have the contract types, the correct contract types in the list of those contracts. We find it often where it may be a commercial a contract, but it may be listed under T&M because it is a T&M contract. But remember, all commercial type of contracts, whatever the type is, regardless of what the type is, would need to go into the commercial section. And don't forget, please do this final tie-out. When you have a tie-out against the P&L, take a look at, right into the schedule, into your internal version, and have the total contract cost, have, as you can see below, the income statement information right directly from the accounting system, and ensure that you actually are accounting for every dollar and have this type of tie-out and this type of validation. And I believe I'll give it back to Mark. I believe we're going to do another poll for you guys.
Sure. Thanks a lot, Carlos. So what we want to know here in the second poll is really what schedule is your biggest headache. I know we haven't dived into Schedule I and Schedule L yet, but after reviewing Schedule H, that typically is where most of our clients and the prospects that come to us complain about. So we wanted to see where you found the headaches to be. Results are coming in. We're going to close it out in just a few seconds here. All right, and I'll go ahead and share the results with you guys. And yeah, so to no surprise, Schedule H, almost 60% of the people say that that's the schedule that gives them the most headaches. And Schedule I, definitely with almost a quarter of the folks on the webinar today, see that as their biggest headache. So really no surprise there, but you definitely want to make sure that you pay careful attention to Schedule H when you're getting ready to do your 2013 incurred cost submissions and everything after that. So I'm going to turn things back over to Carlos now, and he will dive into more of the schedules.
Thank you, Mark. So continuing in the Schedule H area, this is H1. This is a fairly simple schedule. It really is short and not a lot of information in there, but you got to make sure that you're showing all of your pools. This is often missed, especially if you're have multiple fringes or multiple overheads or multiple even G&As for that matter. Make sure that you're accounting for all of the pools, especially if there are changes in your accounting structure and if you've added a new pool. Validate it against H. Have a check, really, have a validation check that built into the internal version, as I mentioned already, to ensure that, you know what, you're taking time in, right? You got a check and balance right in there that you know that that you balanced it out. And this is an area where the auditors really look at it to ensure, hey, how has the contractor really accounted for all of it, and something to keep in mind. 1 second. Okay. Now, interesting enough, I was seeing the polls in Schedule I'm sorry. It's one of the other big ones too. I mean, this is the one that has to speak to Schedule H in a way. You got to align those contracts with Schedule H. There are times that your billings may be at a much higher level. Our recommendation is always to show the build-up, the detail task, and then roll them up into that roll-up billing that you have. So show them, right? This is how you're going to be able to answer those questions that the auditors would have. So align them properly with Schedule H. List the prime and subcontractor or subcontract ID. This is what's already in H, but often we see that those are not even listed in Schedule I. So ensure that you have those two in there. And please, please don't forget about the penalty clause. Over the past several weeks, we've been working with clients where those penalty clauses have been flagged or have been inquired about with letters from DCA because those were just not populated, and that's something that you got to do and ensure that you have those listed in there. Contract limitations. This is a field within Schedule I that truly isn't, we find that it's not really used as much as it really should be used. These are the type of things that you can have for any contract ceilings or adjustments and things of that nature. This is where it goes. Use this column, use this field for those type of things. Physically complete, again, similar to the penalty clause. Make sure it's aligned with O, though, Schedule O, for the ready-to-close contracts. If you have 10 in Schedule I, there better be 10 in Schedule O. If they're not 10 in Schedule O, then it got to be a reason for that. And please, so make sure that you're really doing that type of validation and analysis on that. And one big tip for you guys, develop a process for analyzing the over and under billing variances. It may be related to your indirect rates and variances related to that, or it may be related to some credits or adjustments that you may have done for billing purposes. Nonetheless, develop this process where you can actually have in the internal version to the right of the schedule, in the same schedule, and actually do that analysis based on what are the current rates, indirect rates that is, or what are the targeted rates or provisional rates, and do the difference between the two. So if you're coming up with $90,000 of a variance for a specific contract, and you got $95,000 as an over or under billing variance, then you're close, right? So you get a better comfort level in terms of what those variances are. So again, very good tip. Please do that. Moving on to Schedule J. This is where the subcontractor information, as you're using vendors for your work, for the contract work. Make sure you have the number of the subcontract. This is in the prime, so reference those two. And this should be right in, the information should, especially the prime, they're listed in Schedule H, they're listed in Schedule I, so use that information. Point of contact information, names, addresses, and things of that nature. Depending on how you're doing it, depending on how you are storing this information, you're going to need it, right? So kind of plan for that. And also the validation against Schedule H. We find it often where the auditors actually come back and say, well, we're looking at Schedule J, we got a total of $26 million, and I don't know how you're adding those things up from Schedule H. So can you tell me what accounts are related to that? Look, do it this way. Show this variance right in here. Show that, and make them actually work for it and see, okay, here's a formula. I know what fields or what cells are being brought in from Schedule H. Hey, you got a question, they got an answer there. And also gather the values in the period of performance. This may be challenging, right? Because you may not be able to do it in your accounting system. Maybe you're using some type of purchasing module that maybe would allow you to do that, or using some purchase orders or things of that nature. But certainly find a way to reference that or to have that information, because you're going to need it. You're going to have to put it into the schedule. So please keep that in mind. Moving into Schedule K, this is obviously a summary of hours related to pertaining to T&M contracts. Please verify the hours. Ensure that, or even leverage your reporting systems such as Impromptu or Cardinals 8 or 10, if you have, or any other reporting application that you may be using. Verify them. Run a report, create a report that goes against all of the total hours billed and things of that nature. Have the totals, have a tie-up, do that validation. And this is a big one, making sure that you apply G&A to ODCs. And the G&A is actually the G&A that comes from the schedule or from Schedule A, the G&A being calculated, or Schedule E for that matter. If you have changes or if you have some type of ceilings related to G&A, use the contract limitation schedule column in Schedule I for this. We find it often in clients where they have different G&A rates being entered across different Schedule Ks for different contracts. That's a no. That's a big no-no. That's our recommendation. It will be picked up. It will be inquired, and please use the limitation, the contract limitation column in Schedule I for this purpose. Moving into Schedule L, this is another one. I was surprised to see that. Schedule H, I know it's a pretty tough one, but L is another one. But if you have a payroll person that's actually doing a reconciliation, as you should, then hey, you're good to go. But certainly go through the reconciliation process if no one has really done that. Direct links from other schedules. This is something that don't hard code those. Auditors want to go back and say, okay, where is this overhead indirect labor coming from? Okay, this is this account, or let me trace it back to the actual overhead schedule. So direct links, no hard codes. Please keep that in mind. Any adjustments? Adjustments such as vacation accruals, that's usually the one that gives most headaches, or bonus accruals. make sure that you actually accounting for those. Something else also is that if there are any activities that are outside of the labor distribution process or your labor distribution report, we find it often where maybe a bonus may have been done through a journal entry. So that may not necessarily be in the labor distribution because it didn't run through that process. But nonetheless, you still got to add, you got to add it, you got to consider that. So think about those things, especially if you're off. And that may be a case where you may not be accounting for all of the labor distribution transactions because there may be something away from that or outside of that. Pre-tax wages, as you know, the 941s don't include those. Make sure you include those. You got to gross it up. So ensure that you're actually considering those. And one tip that we have, although zero variance is always the target, plus minus 1% variance is usually acceptable. And that's based on the work that we've done through audits with DCA, and that tends to be an acceptable threshold. But again, I'm not suggesting to aim for that. I'm suggesting that you actually are going through the process of making sure that, hey, we have no variances there. Schedule M, it's a fairly, this is pretty much narrative listing of any decisions, approvals. It all comes down to any impact that it has on your indirect rates. But some of you may not know that it also should include any memos issued by the contracting officer. You should keep that in mind as well. Items that will be included here, especially impacting your indirect rates, things such as severance, pension plans, salary adjustments. Or you may have been acquired by a company, right? So there may be changes there, or breakup, or just into different business units, or whatever the case may be. Definitely include those type of things or changes of your business for your business in this schedule. Getting into Schedule N, this is a fairly simple one, right? This is pretty much completing the form, PDF, and taking a scan of that and signing that and submitting that. Make sure that you have a hard copy of that, save it. What we typically do for our clients is that we have the Excel model, and we also have a PDF, which would be for Schedule N that's been signed. Especially when you have signatures, and we don't recommend to have a signature in the Schedule N. You kind of paste it into an Excel model because you just want to be careful with those signatures. And make sure that you use the right dates, the fiscal year dates. That is often when you're using the prior year submission and you're just kind of taking that and just saving it as the new year, and it's something so small that you're actually missing that. You'd be surprised. They may come back and say, hey, by the way, I need you to resubmit this because of the fact that you have the wrong date on that. I briefly talked about Schedule O. This is a schedule where contract closing information. It obviously includes and impacts all of the cost type, T&M, flexibly priced, or LOE type of contracts. Big pointer here is to make sure that you have the contracts that will be closed after this this ICS, of course, and also, as I mentioned, if they're not ready to close and somehow they're listed there and they're not aligned properly with Schedule I, then provide the reasons why you have it included in there. It's acceptable, it's fine, but give explanations of why they're listed there, even though you have no activity in H or have no activity in I. There's got to be a correlation between all three. If they're not, then make sure that you explain things. And of course, align it with Schedule I with the physically complete flag. If there are 10 in Schedule I, there should be 10 also in Schedule O. Okay. Getting into the supplemental schedules. Remember, they've been renamed, so now they're Supplemental A. This pretty much is a comparative analysis on overhead, G&A, intermediate pools, comparison of direct cost. Don't copy and paste values for the current year. Use formulas to bring that data from the other schedules. So for the prior year, yeah, you can probably just cut and paste, rather than having external links, from other files. So just kind of keep it clean. Don't muck with the percentages. Not that we would ever do that, but automatically calculate. Let the model, let the sheet actually do the calculations and provide the explanations for significant cost increases. Just keep it in mind in terms of and have your own process where if it's over 5% or 10%, provide the explanations and be consistent on that as well. Schedule B. One thing here, it's not very optional, as we all know, the ones that you're doing. They're they've been calling it supplemental optional schedule, but 3 most current fiscal years, you got to do that, and also top 5 compensated executives. I mean, you got to do that. But there are 2 big things here to point out. It's the fact that you got to analyze this a little bit more rather than just plugging the data in and saying, you know what, I'm done with the schedule. You got to look at the dollars, at the amounts and benchmarks, and really do a little more due diligence on this in case they will ask. Benchmarks and some comparability factors. You got to consider those. And of course, any maximum allowable over the threshold allowable amounts, you're going to have to go back to the schedule. In this case, if they are executives, you're going to have to do adjustments, right? Disallow some of these amounts and put it back into a G&A pool. So ensure that you're actually doing it and keeping that in mind. Schedule C, this is one that's not often required. We don't get a lot of that from customers as we're working with DCA as well. But do it anyways. I mean, it shouldn't take too long. I mean, just go ahead and do that. So it's not a very complicated schedule, and even though it's supplemental, but I would recommend, we recommend that you do it anyways. Supplemental O, contract briefs, same thing as schedule, as the executive compensation schedule or the supplemental schedule. Not very optional. You got to do this. And make sure that this is one of the things that it takes me back to my days when I was working for a government contractor, where my CFO really said, look, keep up with the mobs. Make sure that you have the folders intact. Make sure the folders are perfectly aligned with the contract briefs right on top of that. I understand that now that we have electronic files and things of that nature, but keep up with them. Keep up with the mods. And use your system. If you have some type of reporting system, use the system, leverage the system to generate these contract briefs. But keep up with them. I cannot emphasize that anymore. Now we get into reporting with Cognos Impromptu. This is for those folks that may be leveraging Impromptu for many different things. We help a lot of customers with some of the schedules. Some of the schedules can pull data directly. It really becomes more of a copy and paste process. The big one is Schedule H, and as we saw that Schedule H tends to be the biggest pain. You can really develop a report that has almost all of the information that you need for Schedule H. And also just have it on a copy and paste. So it all comes down to how you actually do the report, how you develop that. It really can save you a lot of time. Other things that other reports that can help, not necessarily in the copy and paste process, but when we talk about the B and C and D, those pool type of the chart of account type of information according to each pool. You can pull that information from a trial balance perspective and do that and actually bring it into the schedules. But it's a little more input that you'll need to do, but at least you can leverage the report itself in Impromptu for that. Schedule I, AR, it tends to be a pretty big one to ensure that you have all the build amounts across all of your projects. So leverage the Impromptu to perhaps get you some of the information that you need for Schedule I. And O, this is one that's going to require manual work, no question about it. But certainly have a report that perhaps picks up the period of performance ending within the fiscal year in question. So at least it gets you started with the projects that are flagged with that with the period of performance ending within the fiscal year. So again, something that it can help you to get things going, but obviously with Schedule there would be some manual work there. Now moving into Deltax ER, for those that don't know what CR stands for, is the Cost Point Enterprise Reporting. This is obviously powered by Cognos 10 or 8 if you're using the earlier versions. All major schedules are actually addressed from the Deltax ER package, but there are a few things you have to consider. First of all, they developed this based on a very vanilla type of cost point setup. So if you have a very complex setup, that's something that you may have to do some changes into the reports and things of that nature. But don't forget, I mean, you have the reports, but make sure that you're going through the process of reconciling this right into cost point for those that are using cost point. Incurred cost emission codes, They also need to be properly entered and populated and flagged really in cost point. Pools also properly identified, especially if you have a complex setup. The pools may not be what Deltax typically recommends, especially the sequence and things of that nature, so you got to keep that in mind. And one thing is Schedule J. You can have Schedule J out of this package, but you must have the purchasing module. So if you don't, you may have to kind of go and find another way to do that, whether it's some manual, or maybe get some of the information in a report, but not necessarily in the true formatted Schedule J as Deltax CER would offer. And again, this is just getting you the reports. You still need to go through the validation process, checks and balances. Don't just trust this. Ensure that you understand that these numbers are tying out. So please do that. And also, as I said, some reports may need some changes, some revisions, modifications into those reports because of the fact that those reports they are CAN reports. So depending on how each contractor is set up, those may need some revisions there. So we're getting into the last few slides, couple of slides before I give it back to Mark, and I believe we have a last poll as well. So the inadequacy considerations. We've kind of been talking about it throughout the presentation, but Schedule A, remember, show all pools. This is what we find quite a bit in customers to ensure that you're really showing it all. Full disclosure there. Schedule French, the allocations. Show the allocations, not just the pool itself and the expenses, but show the allocation breakdown and how they're actually going to the final pools. So show the percentages and certainly the dollars. Schedule E, we talked about the unallowables, the non-G&A. Make sure they're added into the G&A base. This is one that we're seeing it more and more where they're not included in there, or they are included in there, but they're not flagged or referenced as non-G&A. So the auditor is left with the question, is this non-G&A or is it G&A? So it's a simple answer, but make sure that when you're doing this unallowable worksheet that you really have the breakdown between G&A and non-G&A unallowables. Schedule H, we talked about identifying, making sure that you have the agencies, the classified, unclassified, subcontract ID, ensure that you have those very small fields, right, that really doesn't have any amounts or values, but they are important, and they are picking that up, and those are the ones that are being scrutinized in a way and being picked up, and as if you get an inadequacy letter, those will be shown in there. Some of the other schedules, Schedule H-1, just make sure you have all the pools there. Don't miss out the pools. I mean, it's something just to make sure, because it's such a small schedule that you may just kind of skip it. So make sure that you have it properly identified for all the pools. We talked about the penalties. Please flag it. Make sure that you have the penalty flag as well as the physically complete, and make sure that it's also aligned with Schedule O. For J, Schedule J, including the period of performance for the subcontracts, your subcontractors, please make sure that you do that. And if you're not doing it now, make sure that you're keeping track of that. And I believe it's the last one is Schedule L, which is ensuring that the labor totals on Schedule L, they're reconciled, right? And they're also coming from the other schedules. And make sure that you are accounting for all of the accruals, and make sure that your 941s, make sure that you also add in the pre-tax wages as well. If your payroll person is doing that for you, great, you don't have to do anything. But if they're not, and somehow you need to do this, then this is the one that you got to consider too. Okay. And I believe I'm going to give it back to Mark. I believe this is my last slide, so I want to thank everyone for listening and joining this meeting. I hope everyone got some information, some very good information out of this, and any follow-up questions, we'd be happy to answer those. So Mark?
Sure. Thanks a lot, Carlos. So we're just going to do our final poll of the day before we dive into the Q&A portion of our presentation. So after reviewing that, we want to find out from you, what's the biggest incurred cost submission challenge that faces your business? Is it figuring out the ICE model? Carlos pointed out a couple new additions to the model that came in June of last year. Some people are having a little bit of difficulty from that. Is knowing where to pull the data from. Is your accounting system structured to ease into the ICS process? Carlos also mentioned a couple opportunities for validating the data, and you want to make sure that you do those for all the schedules that he spoke about. There are some regulatory changes that we can expect on the horizon. I'm sure we all have seen DCAA in the news this year through the Inspector General report and all of that. Or is it finding the time? You know, everyone has a day job, and not all of us can spend such time on an arduous process. So I'm going to go ahead and close out the poll, and I'll share it with you. And yeah, kind of no surprise on our side. Finding the time to submit the incurred cost submission, almost 40% of the people said that. So it's definitely something that it comes at a very volatile time of the year. You know, if you have kids coming out of school and trying to begin your summer vacation, you know, trying to find that to be part of your day job is definitely difficult. And 22% did figuring out the ICE model. So there's definitely some macros that are in there that definitely take a learning curve. All right, we'll go ahead and hide that. I just want to cover one last slide before we get into Q&A. So before we leave the call today, I wanted to point out a couple of different resources that we've made available to you. We did see that earlier in the webinar that many people had not submitted an incurred cost submission yet. So if you're new to the GovCon accounting world, we do have a webinar coming up on May 9th that is a direct versus indirect cost webinar. This will help show, you know, what costs segregate where, and really it's just designed to give you an introduction to the whole world of GovCon accounting. So you can either register for that either by going to our website, or a link will be included in the follow-up email to this. So everyone should be getting that in the next couple of days. You can also reach out to Carlos and I directly if you have any questions about that. I mentioned earlier we were a Deltax Premier partner, so we do offer Deltax First and GCS Premier training courses. If you're thinking about moving to the Deltax solution, or if you are already on it, you might bring on new staff and just want to reinforce some of the practices there. We've got 11 different courses. They range from accounts payable processing, general ledger setup, payroll, really everything that's designed to make you hit the ground running from operating on that system. So those are also available on our website. If you are on Deltax CostPoint, we did start a blog that we call the CostPoint 7 Center. You can access it by cp7center.com, and that's really geared towards helping companies make the transition from 6.1 to CostPoint 7. That was a change that went into effect last year, and actually Deltax is entering 6.1 into sustaining support mode later this year. So you want to make sure that you're upgraded in time to get those year-end regulatory updates. And actually we had a new post come out this morning about CostPoint, the release of CostPoint 7.0.1, which is now out there and available for everyone. Also, make sure to check out DCA's website and the OMB website for the latest regulatory changes. You know, I think we were all kind of surprised when DCA released a copy of the ICE model in June of last year at a time when a lot of people might have already submitted their incurred cost submissions or were in the process of doing so. So you want to make sure to check that on a regular basis to make sure that you are always on top of the latest regulatory changes. And then if you have any questions, you can email us at growahead@neosystemscorp.com, or right here are Carlos and I's direct email addresses, so feel free to send any of us an email if you do have any questions. And we are going to go pull open the question window that we had from earlier today and try to get to as many of these as we can in the next 7 minutes or so.
Yes, thanks, Mark. There was one question pertaining to the schedule changes applicable to the 2012 submission due in June of this year. Yes, to be honest with you, there's also been some of the inadequacy letters that we've been working with customers actually pertain to the 2011 on the changes that they did back in June 2012. So yes, I would say that is correct, and make sure that the changes are reflected into your submission that you're working on today. There is another question here that I believe I have. What is the definition of closed? Well, it really is ready to be closed. So if there are contracts that have activity that have ended and they're considered pretty much done, those are the ones that you need to list out in Schedule O as ready to be closed. So the term there is more about to be closed when the activity or you know, all the cost has been accounted for the most part, or maybe there may be some lingering stuff going on. But if they're physically complete in terms of you stop the work, those are the ones that you would include in Schedule O. Let's see here. Supplemental A required. There's supplemental and optional, right? I mean, that's kind of what they said is actually part of the checklist or the table of contents that is actually right out of the ICE model. But if you've done it in the past, make sure that you don't stop. Make sure that you're doing it. Make sure that you're submitting that if you've done it in the past. Now, if you haven't done it in the past, you know, and perhaps you've been audited and you haven't done that, you probably better, you know, perhaps you don't need to do that, and you certainly don't need to submit it. But one of the recommendations that we offer to our customers is do them, but don't submit them. You know, just having it saved into the overall internal package and do that, especially if you want to do that. If you don't find the time to do those early on, especially with the tight deadlines that you have, and finding the time to do that. But, you know, they're supplemental, and there's no real direction, right? They'll come back and say, well, I need it anyways. So that's something that you got to keep in mind on that. And let's go with, let's see, there's another question here. There's a question here about CPE offer for the webinar. Unfortunately, we're not offering that for a webinar. I believe that would be related to any actual training that we'll do out of the training group that we offer for our customers. Let's see here. There's a couple more here. Let's see, going through. One question here is what triggers the need to submit an incurred cost proposal? Well, it's based on the contract, based on the threshold, and based on triggering the contract pretty much at the end of the day. So, and you may have received introductory type of emails or DCA auditors being engaged by the contracting officer to look into that contract. Therefore, the need to submit an incurred cost submission will be triggered by that. There's another question here about will you be making the slides from the presentation available to the attendees? Mark, what would be the plan on that?
Yeah, we're going to be sending out a recording of this probably in the next couple of days. We normally have to have a quick day or two to kind of refine it a little bit, but you'll definitely see a link to that in the follow-up email to this, along with a link to the webinar we're having on May 9th that I mentioned earlier.
Sure. Thank you, Mark. And one last question here is, where can you find the data on executive compensation limitations? Mark, if you can take me back to the slide, there's a slide for resources. Go back to the resources slide. The Office of Management and Budget, that really is where they actually publish the executive compensation thresholds by year. I believe it's only through 2011 up to now, but I think they usually post that late April. So I would suspect that for the 2012 threshold, it will be posted right in there. And then also, I mean, there's been quite a bit of dialogue with Congress in terms of reducing that. And there's been some bills introduced to reduce that down to $400,000 for the executive compensation, but that hasn't been the case yet. So certainly something that you want to keep up with it and check the website out for that.
And that's a little bit of a longer URL too, so we'll make sure to send that in that email that recaps this presentation that I referenced earlier.
Okay.
Well, we're getting close to the top of the hour, so we want to make sure that we give you all the time back in your day that you need. What we'll do is there's a couple of questions that seem pretty specific to someone's situation. So Carlos and I will follow up with you offline. You can expect to hear from us in the next couple of days. But until then, we thank you very much for attending this webinar and look forward to having you on the next one. Thanks.